Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the daily FX walkthrough. We're going to get started in just a moment. Tonight we're actually going to focus on an article written by Terry Belkis earlier today. So let's bring that up right now. And if we go to dailyfx.com, we can see that this is the home page. And we can just go ahead and click on her article right there. U.S. dollar still strong on expectations the Fed will raise rates, ECB will cut, but when? And I'll just read you the first paragraph there, just in case you can't see it at home, as the font could be a little small. The sharp moves in the euro versus the U.S. dollar have been the result of expectations that, in the near term, the Fed will hike rates and the ECB will cut. However, there are indications that these shifts in interest rates won't occur until 2009. And once this becomes clear to the markets, euro-dollar could see a turn higher. Now, obviously, recently we've had the massive sell-off from about 160 down to close to the 140 figure. And I recall when the euro first started making the first part of that down move, that was the first time I personally had heard talk of expectations of a Fed rate increase and an ECB cut. So at this point, I think she makes a very valid point here that this could definitely explain why the euro has sold off 2,000 pips, but the timing could be an issue here. And like most markets, the move might be overdone, particularly in the short term. So what do we do with this information once we've read this article? Well, what I would do, actually, is go back to the Daily FX homepage. And normally what I would do at this point is click on Jamie Setley's technical report. I usually follow him every day, at least see what he's doing. He uses Elliott Wave quite extensively. So let's see what he has to say about the euro. And again, we don't have to understand, he uses Elliott Wave. We don't have to fully understand Elliott Wave to use his analysis. So let's see what he says about the euro. And I'll just read his paragraph here. There is no indication that a low is in place. Again, this is for the euro dollar. But there are a few things that do warn of a turn. RSI divergence on multiple time frames and oversold RSI on multiple time frames suggests weakness is limited. One can label the drop from above 149 as 5 waves. A rally through 44.28 would indicate that a larger advance is underway. So we can see that Jamie is starting to get a little bit bullish on the euro dollar. So what do I do at this point? At this point, actually, I would bring up the chart myself of the euro dollar. So let me go ahead and do that. And once, hopefully you can see this at home, and we could see, again, the massive sell-off here. And we can see the sell-off from about 160 down to just above the 140 figure. And what's interesting this evening is that if you notice, if we zoom in a little closer here, and let's zoom in a little closer on the top of the move here, and we could see a doji candle. This is what's called a doji candle, which often indicates a reversal, occurred just above the high print here. I believe was about 160.30. And if we look at today's candle, the low for yesterday, we see a similar pattern, a similar doji. And a doji after an uptrend signals a potential reversal to the downside, and a doji after a downtrend signals a potential reversal to the upside. So there's, with all these things, with Terry's report, with Jamie's report, there is a chance that the euro could be turning. And a doji, one of the things I love about doji candles is they represent excellent risk to reward. And the low point of the doji, and let me zoom in a little closer here, just in case you can't see me at home, usually represents a good reference point we can use. And I believe that low on this candle right here is 140.45. So me personally, that's what I'm using as a reference point right now. I would have a very slight bullish bias against the 140.45 low, and again because of that doji candle. And right now we can see a second doji candle, but this doesn't really count because this is an active candle right now. So this is a trade setup that I've found using dailyfx.com and sort of assimilating all the information and then integrating some of my own analysis into the equation. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.